Stock slip on Wall Street as Fed Chair Jerome Powell says slower economic growth will be needed to bring down persistently high inflation, indicates that rates are not too high at the moment. Higher treasury yields also put pressure on equities. Asian markets open lower after Fed Chair Jerome Powell's hawkish comments. The gift Nifty also implies a lower start for the Indian market. And fears of the Israel-Hamas war escalating into a regional conflict push oil prices higher. Brent surges over 1.5% to currently trade at above $93 a barrel. FMCG major Hindustan Unilever reports a steady second quarter, although volume growth of 2% is marginally below street estimates. ITC reports strong internals with cigarette, FMCG and hotel verticals beating estimates. The cigarette volume grows around 6 to 7%. In key earnings to track today, JSW Steel is likely to deliver improving margin, although on a low base. Other numbers to track include L&T Finance, Z Entertainment and Loris Lab. Good morning and welcome to Power Breakfast. I'm Pavitra Parekh. Those are the headlines. We've made it to Friday, but it is going to be a hectic day of trade. There's lots that has come through in terms of the handover from Wall Street. Like we were pointing out, the equities are under pressure, largely on the back of what's really going on with the U.S. money market. The bond yield saw a 7 basis points rise, and we're almost at that 5% mark on the U.S. 10-year. On the back of that, you have equities which came under pressure, and that is being seen in the Asian markets as well. So if you take a look at that, there are cuts seen across Asia right now. And what's doing the worst this morning is the Korean market. So the Kospi index is down almost 2%, 1.9% lower there. You have Hang Seng in Taiwan on your screen. And like you can see, cuts coming through there as well. So the Taiwanese market is down around 0.9%, Hong Kong down around 0.6%. And whichever market you look at is definitely seeing some cuts coming through right now, and pretty severe ones. In fact, a lot of the Asian markets for the week, because we are at the final trading day of the week, have seen between 3.5% to 4% in terms of just a cut for this week. So it has been quite rough across the board for equities. The gift Nifty will also come up for you. We recovered a fair bit towards the end of the trading session yesterday, and we ended with around a 45-point cut. Looks like once again we're going to get a gap down start today, and right now it is showing you a full 100 points lower on the gift Nifty. So that's how it's looking as far as the Asian markets go. But let's also talk about the US. Wall Street ended Thursday's trading session lower, like I said, because the 10-year yields really continue to rise. So the Dow was down around 250 points at the end of the session. The S&P 500 fell around 0.8%, and the tech-heavy Nasdaq was down almost 1%. Now, the 10-year Treasury yields notched a high of nearly 5%. It was at 4.99% to be precise. And Federal Reserve Chair Jerome Powell, in a speech which he delivered at the Economic Club of New York, acknowledged that the significant signs of cooling inflation are there. However, he added that the central bank would be resolute in its commitment to that 2% mandate. Let's also listen in to Steve Leisman explain all of the details and the takeaways from that very keenly watched speech last night from the Fed Chair. Listen in.
Fed Chair Jay Powell offering a largely, I call it a neutral speech on the outlook for rates, suggesting the Fed could be on hold for a while here, but warning that if the economy doesn't slow, the Fed could go higher.
We are attentive to recent data showing the resilience of economic growth and demand for labor. Additional evidence of persistently above trend growth, or that tightness in the labor market is no longer easing, could put further progress on inflation at risk and could warrant further tightening of policy.
Powell said not once but twice the Fed was still seeking that elusive, sufficiently restrictive level, a sign that he's at least not sure if the Fed has done enough yet. But the Fed chair did acknowledge there was risk on both sides, said he was still waiting for the effects of things like the considerable monetary policy lags hit the economy, those higher bond yields, as well as the potential for geopolitical tensions to hurt the economy. The futures market took the speech as mostly dovish with a sharp decline in the outlook for hikes. Look at that, just like under 2%. It's really 1.6 for the probability for November hike, well under 30 now for November, and just around 27, 28% for January. Powell made clear the Fed would proceed, and I quote here, carefully, and seemed willing to give the economy at least a few more months, guys, to cool down before he would take any action.
All right, Steve, thanks a lot for getting us all of the highlights from that important speech last night. But let's also listen to Robert Kaplan, who was the former president and CEO of the Dallas Federal Reserve, talking about his views in the Fed chair speech, as well as, of course, the rising bond yields that we've been talking about.
I think Jay Powell did the right thing in that he warned they may have to do more, but I also said they're going to move deliberately, which sets up if they decide to skip the November meeting, which I think they should. And so I think he's trying to position the Fed to do their job. The reason I say the bond market is responding to other factors, I think the bond market is responding, honestly, at this point, a little bit less to the Fed and more to the fact we're running very large deficits, very high deficit spending. The supply of treasuries going forward is very significant. And it's not that the bond market, that we won't buy treasuries, just you have to get paid more.
All right, that is the word coming in from Robert Kaplan, and that's what we're looking at globally. Like I pointed out, there's a lot going on in terms of the handover, but let's talk about how all of these cues impact our own markets and the stocks that you should watch for in today's trading session. Ekta, Surbhi and Nigel are all here to take us through the trade setup. Guys, a very good morning to all of you. Ekta, we were just going through the global handover, which definitely looks quite weak.
Well, yes, absolutely. The markets did recover from the lows yesterday, but closed in the red. We had the markets which in fact closed in the red for the second consecutive day. FIIs net sold 1,093 crores, DIIs net bought around 736 crores, so institutions were net sellers yesterday. Now, in terms of cues, markets are definitely in risk-off mode, like you mentioned. The Fed chair has indicated that inflation is too high. They likely require lower economic growth. U.S. Treasury yields have jumped close to that 5% figure, the highest levels that we've seen since 2007. U.S. markets close lower. Asia's in the red. Crude prices are still above $90 per barrel on nagging worries about the Middle East. So this combination obviously doesn't bode well for the Indian market, so the gift Nifty is indicating a lower start. On the lower side, the low for yesterday was 19,512, so that would probably be a near-term support to watch out for. A lot of result reactions, ITC, HUL, United Breweries, Emphasis, Voltas, Equitas, SFB, to name a few. A lot of numbers today as well. Central Bank of India, JSW Steel, L&T Finance Holdings, Laurus Labs, and tomorrow we have ICICI Bank as well as Kotak. So the street will probably position themselves on the banking space and on these two large banks ahead of their numbers tomorrow.
Okay, so lots for us to track, both in terms of the domestic as well as the global cues. Ekta, thanks a lot for that. Let's also talk about all of these stocks, some of which Ekta was mentioning. So we take us through all of the important results that came through post-market close and a lot from the consumer space.
Yeah, a lot of earnings that came through. Let's start with HUL. It was a good operational performance. The revenues came in at 15,276 crores. Margins came in at 24.2% versus expectations of 23.2%. IDC, it was a strong internals from all the core segments. Cigarettes, the FMCG EBIT and hotels were a beat versus our estimates. Revenues came in at 16,550 crores. Margins came in at 36.5%. United Breweries, it was a strong revenue growth, but the margins were a miss. Revenues were up 12% and margins came in at 9.8% versus 13%, and the expectation was around 11%. Havells, it was disappointing on all fronts. Weak revenue growth across all the segments. The total revenue growth was 6% on a year-on-year basis. Voltas, good revenue growth, but EBITDA margin disappointment. Revenue growth was 30%. EBITDA was down 30% on a year-on-year basis. Tata Communication, it was a mixed quarter. Again, revenue beat, but margins were lower. Revenues were up 2.1% sequentially and up 10% on a year-on-year basis. Emphasis, the revenues were up 0.75% and EBIT margins were flat at 15.5%. Other companies that will react to numbers, Jindal Stainless, Metro, Cyient and Equitas Small Finance Bank.
Okay, that is a lot for us to track. Surbhi, thanks a lot for taking us through all of those individual stocks and the kinds of earnings that did come through from there. Let's get in Nigel now to talk about all of the cues from the futures and options space. Nigel, looks like we could open at that 19,530 kind of mark with that 100-point gap down that we have. How's it looking from there?
Well, Pavitra, we are in that range, 19,500 to around 19,800, 19,850. So you've been buying the dips, you've been making money, but also you need to sell at the top as well, and that's what's being played out. So even bounces are getting sold into. In yesterday's trading session, well, you had very mild shorts that got added. On the FIs, on the index futures, well, the country remained net short with close to 71% of their positions on the short side. Since we're starting a new contract, yesterday was Nifty weekly expiry that played out. So you have two strikes that are very, very active and have the highest open interest. On the downside, 19,500 put. The total open interest is around 73 lakh shares. That's the total open interest that we're talking about, not open interest change. And on the upper end, it's 19,800 call. Well, that is the total open interest is close to around 73 lakh shares. So just punching in those numbers, since the 19,500 mark has the highest open interest, and yesterday we almost went to that mark, it's the support level comes in out there. At higher levels, you have the 20 and the 50 DMA, which will be a bit of a resistance. The Nifty Bank, well, yesterday it did bounce from the day's low, but it came off as well, and it ended pat in the middle of the day's trading range. So those are the two markers, 20 and 200 DMA. Well, I'll tell you what, if you're a brave heart, you can look to buy that dip today. But also, if you get that bounce, you need to square off your position. I think going by the global cues, you don't want to carry an overnight position into this weekend. Back to you.
All right, Nigel, thanks a lot for taking us through those cues. With that, we're going to get into a short break. On the other side, we're going to discuss the conflict in West Asia, which is only escalating. And we're also going to talk about what this has meant for the entire commodities pack. Stay tuned for that. Welcome back. Let's now get you the latest from the ongoing conflict in West Asia. Addressing the media alongside British Prime Minister Rishi Sunak, Israel's Prime Minister Benjamin Netanyahu warned that the conflict with militant group Hamas would not be a short-term engagement. Meanwhile, Hamas has said that an Israeli airstrike that hit the north of Gaza had killed the head of its security forces. U.S. President Joe Biden and Egypt's president have also come to an agreement to permit humanitarian aid into Gaza, which gives some kind of hope to civilians. So that is the latest that we're getting out of the conflict in West Asia. But Manisha joins us now with an update from the commodities space. Manisha, this continuing conflict has also sent crude prices up another 1.5%.
Well, it absolutely has, and we are trading at a $93 a barrel for the Brent now. And after 7.5% of gains in the previous week, the crude prices are up by 2.5% in this week now. So strong supports coming in, and the support also comes in from the fact that the U.S. is also looking to buy crude for its strategic petroleum reserve, and that could be about 6 million barrels in the month of December and January, and that has been supportive as well. Not just crude, take a look at the gold prices. We have seen safe haven buying here as well. So gold is now trading at a 3-month high. We are just barely $20 away from $2,000 an ounce. So very strong buying coming in for metals as well.
Okay, Manisha, thanks a lot for getting us all of those details and telling us what this has actually meant for the crude prices as well as for the precious metals. With that, it is time for us to talk about the latest on the India-Canada diplomatic tussle as well. India has formally conveyed its plan to unilaterally remove diplomatic immunity for all but 21 Canadian diplomats and dependents in Delhi today. The Canadian Foreign Minister says that 41 diplomats have already left India, but adds that Canada will not reciprocate in kind, although an Indian diplomat has been termed as persona non grata already. Now, the Canadians have also suspended in-person visa services in Mumbai as well as Chandigarh. So that's where things really stand right now on the diplomatic tussle between India and Canada. It is time for a short break on that note. But when we return, like we were telling you, it could be a lot about the FMCG pack today. HUL and ITC both reported their second quarter numbers post-market close yesterday. So we're going to talk about that when we come back. Welcome back. You're still tuned into Power Breakfast. Now, let's talk about some of the big earnings that came through yesterday after market close. We had both HUL and ITC reports. So, Mangalam is here to really help us make sense of those numbers. Mangalam, let's talk about HUL first. How was it?
Well, as far as the FMCG earnings trend this time is concerned, the revenues of all the companies that have reported so far have been slightly below what the street was anticipating. But at the same time, the operational performance has been a lot better than anticipation as well. So that's something that you can see in HUL too. Close to around 15,300 crores, the revenue that the company posted as against the poll of a little over 15,300 crores itself. But the EBITDA, closer to 3,700 crores, is much above what the street anticipated, and as a result of which, there has been a beat on the bottom line as well. What's good about HUL's numbers this time around? Gross margins, they've expanded by nearly 700 basis points. And the company's EBITDA margins have been a beat despite them increasing their ad spends by 65%. For instance, ad spends the same time last quarter were at 7% of sales, and that has increased by about to 11% of sales itself. And despite that, there has been a big jump in the EBITDA margin, and that is a trend which is positive because the second half, there is expectation of the revenue growth to come by as well. What's not good is the volumes. They grew just around 2% versus street expectations of 3 to 4%. And the management has said that rural still continues to be a problem. They will only see gradual rural recovery, and going forward, there will be high competitive intensity. What is the stock likely to do? Well, it's about 8.5%, 9% away from its 52-week high, trading at around 54 times. So let's see whether it sees a bit of a bounce back in today's trading session or not. I sense that there could be a bit of a relief on HUL.
Okay, and it had closed absolutely flat, right, yesterday, so it'll be interesting to see how this one moves now. But Mangalam, the other big one that came through was ITC. Looks strong, at least for the core businesses.
Yes, for the core businesses, ITC reported a very strong set. Now, there are two ways to look at ITC. On the one, you will compare it with what the street was anticipating. On an overall basis, you would see that the revenue is mildly below expectations, as is the EBITDA, and the net profit too has been aided by other income, which came in at close to 900 crores versus 500 crores itself. But here's where, the weakness ends, because the positivity is that the cigarette volumes, they grew around 6 to 7% versus street expectations of around 5 to 6%. The FMCG revenue, that grew about 8%. Yes, slightly below street expectations, but not too different from what the industry has been reporting so far as well. What's a positive is that their FMCG operational performance has seen a marked improvement. Margins have improved by 170 basis points, and the EBIT itself has jumped by 37 basis points. Hotels have done extremely well. The street was working with a number of 10 to 15% in their revenues. The companies reported 21% jump in their revenue. Agri-business saw a lesser decline than anticipated. The street was working with a decline of 10 to 15%. Despite that, the company's actually seen a decline of just around 2%, and that's largely because their value-added exports did a lot better. Paper business was the pain point. The revenues declined by about 10%, and at the same time, the EBIT declined by 50% as well. So a lot of the weakness in the numbers was caused by non-core businesses. The core businesses actually did better, and the worst part was in the core businesses, they were in line. So no real problems. ITC too has corrected about 10% from its highs, so see a bit of bounce back on that counter too.
Okay, Mangalam, thanks a lot for taking us through both of those very important earnings. We're going to watch for these stocks in today's trading session. Could be, some of the important moves to look at. But with that, we're going to wind down in this edition of Power Breakfast with the news that the global markets are really not having it this morning. Asia is sharply lower. Kospi is leading those losses with a cut of almost 2%. Across the board for Asia, we're seeing sharp cuts come through, and the GIFT Nifty is also indicating that the start for our own markets could be closer to that 19,530 mark. Thanks for tuning in. We have Bazaar Morning Call to take all of this action forward.